The following is a presentation of TFNN. The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Don't forget, you can listen to us on Tiger TV, 9 hours of live for the commentary a day. TFNN.com right there on Tiger TV. Also, you can listen to us on your mobile phone at TFNN.mobi, no matter where you're located. Let's check out where the market's at right now. We got the S&P is currently up a whole point. We got the Nasdaq up 15, sort of pushing strong there. We got the Russell up 5. Dow's pulling on back down 35 points right now. Gold's currently down 2.8. Silver is pretty flat on the day. Copper is down about 0.5%. Oil is up $1.70 right now. So a nice big move on oil here on oil inventory day. We got natural gas. It is up 5.5%. Monster move. We got corn right now up $1. We got soybeans down $5. Euro dollar pretty flat on the day, down 10 pips right now. Pound dollar moving strong, up 90 pips on the day. Just pushing those numbers right there. Looking on over at Aussie dollar, it's currently up right now about 34 pips. And let's see here, we got the euro yen is pretty flat at the moment, just up a pip over settlement. We got US yen up 17. Pound yen though, with that pound obviously being the move, 27. Looking over at the dollar CAD, it's up 105 pips. Massive move on this morning's CAD statement. And we got the dollar franc is up a mere 9 pips. So with all that being said, let's check it out and let's see where the markets are at, where they lie, and how we could have taken advantage of the news that we went over yesterday. Both of the news trades worked out well and hit their targets. So let's walk through them, do a quick review, and also get you set up for the rest of the week and what we got. We only had a couple straddle strangle trades on the rosters for this week. One of those was last night, and we had the Aussie dollar, and that was the CPI right there on the Aussie dollar. And so I'm going to pull up an Aussie chart, and we'll get this one going. And let me pull up, let's see here. So how'd that come out? Well, last night when the Aussie report came out, we had a CPI number at expectation of 0.5, and we got a 0.8. And the 0.8 was a strong buy right there on Aussie. So let's go look at it. Well, the report came out. What was our expectation of movement? Usually it's just about 50 pips. 75% of the time we get a 50-pip move or more. And the average range actually is 50 pips. You take the 75% that hit or break 50 pips, and the 25% that don't. The average is about 50. And from high to low, we got a pretty massive move. We can look at the low right here, right as the report came out, to the high 2 hours after, which we hit pretty quick. So right there, and we got 85 pips, more than enough for our 50 pips. I was doing this trade last night. Me and my daughter were both on, and I pulled it up. We looked at it. Let me see if I can pull up the information on it right here. And so I put on a straddle on the trade, and I went in, and it's one of those trades that usually it moves or it doesn't. So we hopped in. We were looking at the 8 o'clocks and 9 o'clocks and the 11 o'clocks, and I was able to get in on my trade there at 88.18. I was able to buy my upper spread, and I was able to sell my lower spread at 87.89 with a common floor and ceiling of 88.10. So what that basically looked like, if you drew the box on the screen, was we had a right there, okay, and this went way, way up. And then we had another box. We'll make that one green, so that was the one we bought, okay. And I'll make it... we'll just make it some shade of green here. And then on the one that we sold, we sold one right down here But I got in, decently early on the trade, so before a lot of this movement happened. And market was a little bit closer to where it is right there. I got in just after 7. It was like right around here, okay? And if we follow this on back, we can see. So, it was a little bit in the money on the sell side. It was out of the money on the buy side. That's one of the reasons why you can note, if you look over, if I pull back up my Excel sheet here for you, you can see where, one side obviously had a little more risk than the other. And my sell side risk had 21 pips risk. My buy side risk only had 8 pips risk. It's because I was in the money whenever I got in on the sell side. It was already a little bit inside that box right there because it was down here. Anyway, so I looked at that and I go, okay, well, what's my 1-to-1? Well, I need to make 37 pips on my short side because I need to make 29 pips plus the 8 pips I plan on losing on the long if it goes down. Or I had to make 50 pips on my long side, so just at, my expected move. And so that was a little bit of a concern on the trade, is actually be able to pull that off and get that trade in there. But we were just at 50 pips, and so I went ahead and went for the trade. And watched it a little more carefully because it was just like right outside the range. You see my goal there was just outside the average range, and the market was trading like 88.01 right before the news came out. Now earlier than that, it was a little bit higher when we actually got in, but it trailed down, and so you start to think, hey, this thing's going to head on down. Well, then it flies on up. And this was the most important thing I noted last night when I was watching this one. So just a good lesson to make sure that you did, capture on this. And let's look at this. You'll see this. And this is where these deviation levels, they can be night and day in your trading, okay, in the results here. So right there, we're at a 1 deviation level. So I'm just going to really plot that because we sort of lose the thing when we zoom in. And so that's the 1 deviation level. And we go and we look at this a little bit closer. Notice how this thing went right up, and I actually had my take profit, just a few ticks above. I actually had it at 68, and it did hit that price. It didn't hit on the spread yet because you got a little bit of premium, you got bid ask in there, but the price actually itself did hit 68, went to actually 69. But I noticed that, my take profit is just on the other side of the 1 deviation level. And, that being the case, with that level being, let's see, what exactly was that level? 866, yeah, I thought so. So we got, instead of 68 being my take profit, 66 was the deviation. I'm like, I'm going to take it right before that 1 deviation move, because so often it may, hit it by a tick or miss it by a tick or maybe just go past it by a tick or 2. I don't want to lose on this trade because I'm going for 3 more ticks. Anyways, the thing does go up. It breaks it by a couple ticks, but then it pulls back down. It goes back up again, breaks it by a couple ticks again, the 1 deviation level, and that's that big pink line right there if you're looking at my screen. And then it pulls back on down, okay? And so I would have been very glad that I got out of this trade. Now, you did have, if you had the 11 o'clocks, if you did go that far out, if you went that far out, though, you probably would have had you definitely wouldn't have been at 1-to-1 on the trade, but you still would have been profitable. Right there at the 11 o'clocks, it did actually go back up right before 11, and it hovered up right up around that 1 deviation level. But that deviation level let me know, hey, it's time to go ahead and get out of this. Don't go for $5 more, okay? You know what? If you risk $30 and you make a net 25 on it, okay. You didn't hit 1-to-1, but you hit your trade. So I don't want to make my profit decisions just barely based on profit. Risk reward obviously is essential. Risk is everything. You want to keep your risk reward balance in check based on your probability, all that fun stuff. But I don't want to go for 1-to-1. It has to hit this price, and just be I'm going to stick to that. When I go at 1D, there's a wall in front of me, and I'm trying to stick so much to my guns on these last 4 ticks that I'm just gonna wait. And that's not the wisest move. If I see that, like I said, that 1 deviation level, or really any deviation level, it's just like a couple ticks. My profit's just a few ticks on the other side of that trade. I'm gonna be more likely to give up a few bucks and take it early and lock in a winning profitable trade. So hopefully you're able to follow on with that. I know some other traders were that I talked to last night. They were able to do that exact same trade. It worked out really well. What about this morning? This morning over here on the dollar CAD, pretty interesting layout. Let's go through. We'll look at it. Now, the dollar CAD this morning was, it's a rate statement. So, one of the important notes is on most rate statements, you do get a decent move so long as there's like some, added information. If it's just a statement, sometimes it can be pretty flat. But, if you go in and on the statement, there's press conferences and everything else, that's going to add to that volatility, okay? And so you should expect a decent move on it. You don't expect them to change the rate statement that often. But those when they add in that piece, you should be looking for that. So the Bank of Canada, they released their rate statement at 10 o'clock, but then they had a monetary policy report that went out at 10:30, and they had a press conference that went out at 11:15. So you could do the 11 o'clock, but you miss out on the press conference that happens at 11:15, which may give you that extra oomph that you need to make the trade profitable. May not, okay? So if you're looking at the 3 o'clocks, let's pull them up, let's check them out and go, how would that have played out for you this morning? And, what was our expectation? Our expectation on it was about 85 pips. So 70% of the time it breaks 50, and the average move is 85. And let's see here. I have the charts on the 3 o'clock expirations. Let me bring those up. We'll go through them. Like I said, this is a unique thing, and that's why I thought it was important to bring this up today about rate statements. Is we're not always looking for that big. If there is a divergence, if they go in and they change that statement, it's really going to be a mover. Okay, the thing's going to fly. But when I say really, like more than the average expectation, because think about it, the average is the average, and they don't usually change the interest rates. So since we don't normally expect them to change those interest rates, then our average is actually based on them not changing it. Okay? Because on average, they don't. I hope that makes sense. But let's see here. I'm trying to get all these on one page so you can see each piece of the trade as a whole. Okay, so over here, for looking at this trade, and again, we got 10 o'clock, the statement's coming out. We got 10:30. We got the policy report coming out. We got 11:15. We have the press conference. So there's a lot going on. So that would be a reason that you might actually be willing to go, if we had an 85 pip move, if I can pull this thing off, I'd like to get the 3 o'clock because I get more time to be right on my trade. So we come back, we're going to look at this, but we definitely, got a nice move on the trade. And we'll walk through it step by step for you. And right now it's like the high on this thing, 110 pips. So much more than the average 85. But stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhoades, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, TAZ Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos TAZ Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to TAZ Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. So we're looking right now at the dollar CAD this morning. And this big monster move that we got off of it. It wasn't a surprise. Talked about it yesterday. Said we were looking for at least 85 pips on the trade. And so if you're going in and you're putting this trade in, doing a little calculation, I'm working on, actually just got a program that's going to help me do this. But I put a easy little calculator up that we can use. But right here, when I put the price I bought at, put in the price I sold at, I put in where the dollar CAD was currently trading whenever I got in. I put the common floor and ceiling of the spread, that upper box and lower box, and the expected move. And I go, okay, well, based on my risk, how much do I need to make on each side? Okay? And based on that, then where do I expect it to go on the average high to low? So I expect it to go, down to 1.0877 or up to 1.1047 on the average. May go higher, may not quite hit it, but on the average. Is my take profit goal within that range or very close to that range? In this case, yes, it was 1.1020, 1.1090. So it was obviously higher. 1.1090 was higher than 1.0877 and 1.020 take profit on my long side where I'd sell out. It was lower than 1.1047. So I could take profit faster than the expected movement of where I would think that the market would go when I got in the trade. And so obviously it went up. Take profit goal was 1.1020. And if you were doing that trade, then you should have been able to basically take that profit within like the first 5 minutes. You should have got your 1-to-1 right there. So literally, a 5-minute trade from release to exit, and very, very fast. Again, 1.1020 being the take profit. So you would have got in, and you've been out that fast. Okay. okay? And now, could you have held on? Could you have stayed in the trade? Could you have trailed your trade? It's tricky. Yes, you could have. So, but, why would you not maybe? Well, why would be a hesitation on that? Well, these news trades can go up and they can go down really fast. Okay? I mean, they can literally retrace sometimes faster than they take off. So, you're going for base hits and to get them over and over and over again, or are you going in and trying to, make a fortune on every trade and losing a lot more often? If you were going to trail, what would you maybe want to do? Well, if we're going for a 1-to-1, here would be a way to trail if you want to have that safety net built in. I guess would be a good way to put it. Okay? Let's say you do a multiple of 2. You're going for 1-to-1. So if I go for 1-to-1 on half my position, if I put in two straddles, and one of them makes enough where it makes 100% of the risk on one of them, then it would actually cover another one's risk. So if I put up $50, okay, and I net a $50 profit, well, what if I put up $100, okay? I remove $50 of my risk by closing half. I make $50. The remaining $50 of risk is now covered. So that would be a way if you wanted to go, hey, I'm going to set a 1-to-1 on half. That'll remove my risk from the other half of my initial risk that I came in with. Now I have no risk from what I started with. And then the next step I would probably recommend adding in is don't even let that other one become a loser. Okay? So if I put up $50 risk and I make on one contract, so I put up $100 risk total, and make $50 on one of the contracts, then what I'm going to do is I'm going to, very simply, very easily, okay, I'm going to take off one of them at a $50 profit. There's no more original risk on the trade. Start with 100, remove 50, made 50, $50 risk open, $50 profit locked in, 0, okay? Then what I'm going to do is go, okay, I don't want to even lose the other $50 because I'm up $50 on both of them. I don't even want to lose the $50 on the other trade. So what I'm going to do is, if it gets back to break even, okay, now what is break even? It's real simple. Simply combine, look at where, in this case, look at what price you bought at. So let's look at how to see break even. This is a very, very simple formula, I promise. I bought at 1.9080. I have $10 risk on my short contract. So if I make $10 on my long contract, I'm at break even. Meaning my short side could lose, and I've closed my long with the $10 profit. So if I lost $10 on my short one, I made $10 on my long one, I'm break even. So if it gets back down to 1.0990, then it comes back down here, then I exit the trade. And now I can trail it. So we'll talk about how to trail it when we get back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. Okay, so we last left off there. We were talking about, how can you possibly, what can you do to pull off doing one of these trades, but at the same time doing it without, simply closing it out and simply taking a 1-to-1. Is there a decent method for that? Is there a not being greedy method? Okay, because you don't just want the greedy method. If you're going to do this, you need to be doing a multiple of 2. Okay? So if you want to do this, right, do a multiple of 2. So 2, 4, 6, 8. Don't do just one contract. If you're only doing one contract, take your 1-to-1, get out, move on. Okay? Now, if you're doing a multiple of 2, what I was saying was, let's say you're risking, $50 a contract, a straddle. Okay? So total position. And you put on 2 of them. So you got $100 at risk, $50 each. You take out half of your position. So if you just did 2, 1. If you did 20, 10. Take up half of your position. When you make that $50 a straddle, that covers all the risk on the other trade. Now you don't have any of your initial risk. You had $100 of risk on the trade when you went in. You're leaving $50 of risk open. You made $50. Worst case scenario, since you've walked in a $50 profit and you have $50 risk open, worst case scenario is you're back to where you were before you started. Okay? Next step. Let's make sure we actually make something on a trade. Let's not let a winner come in turn into a break-even or winner turn into a loser. So now on that second half, if you're going to do this, especially on bigger moves like rate statements and things like that, move your trailing stop, per se, to the break-even price, which is the risk on the other side needs to be made from where you bought the spread. So if I bought the spread at 1.0980 and I have $10 risk on the other side, I need to make $10. Okay, so if that bought spread, if that bid on that long side gets down to 1.0990 on that second half, I'm out. At least I locked in my $50 profit. Okay, what about the short side? Well, the short side, 1.0950. I'm risking $20 on the long side on this trade. So I need to buy the thing back. If the ask, now this is if it's going down, I've taken profit on the way down, I need to buy it back if the ask got to 1.0930, because I'd be up $20, sold at 1.0950, bought back at 1.0930, $20 locked in profit. Therefore, I made my $50 and I covered all my risk on the other side, so the other half was break even. Not the best scenario, but at least I made some money on the trade. Okay, and I had some room to let my profits run. Now, that's how to manage the risk. That's how to manage the profit. That's how to ensure you don't give up the profit. Now let's talk about how to trail your stops. What could you do? Well, you could look at 5 or 10-minute bars. My favorite usually when we're looking at these are 10-minute bars. But so you could look at that. But what are the methods that I teach? Think about the different methods that I've taught as you listen to the show. And one of my favorite methods, and that is a close above a deviation level, right? I talk about that over and over and over again. So let's look at that. Let's zoom in a little bit closer and see how would that have worked out. And we can look at 5 and 10 minutes both to see how this would have worked out for you. But on this specific trade right here this morning, you're following this up. You're in, you're out of this trade right there. You can barely even see the line there. To make a little darker color so it shows up. So you're in, you're out of the trade. Now you're waiting on a close above the deviation. We get a close on this bar at 10:15 above the deviation. So we set a trailing stop 5 ticks below. Give the market a little room to move, a little room to breathe. Okay? Market's moving down, market's moving up. Touches it, doesn't close below it. Now you can get pickier on this, but on this it does not close below it. Or, it does not close above it. Goes. Finally, all the way over here at 11:35. Remember, we got the 3 o'clocks. It does close above it right there. Okay? So now we can trail our stop again. And now the market's just sort of, oscillating up and down, sitting around 1.0160. It's right near, it's pretty much at its highs of the day. So this allowed you, if you would have done this method, then this would have let you go from that original take profit there of 1.1020. Right now, you basically have protected another 25 ticks, actually 35 ticks of profit that you've protected by having a trailing stop. If you were in all the way, let's say you closed right now, at this point in the day, you thought, hey, it's the middle of the day, the thing's done, lunch is here, it's not moving. That's 64 more ticks. So you went from making, on our original trade, where we made 30 net profit, okay? You actually would have doubled that on the other half. So you made $30 on half your position, and you'd be up 30 plus 60. You'd basically be up about 90 pips on the other half of the position. So you'd be up a net 120 on a $30 risk on the trade. So pretty nice. Originally, actually, I guess you'd be up a net 120 on $60 risk because you did 2 of them. So you'd be up double what you were going for. You ended up at a 2-to-1 on the trade without having to be greedy, without risking all of it. By doing half, taking off half, removing risk, moving to break even, and then just trailing your stop. So that's one very simple method that you could use, and it doesn't take, you're not having to guess and all that, and try to outsmart the market and figure everything out. You're just going, what, closes above. If it hits this, what do I do if it goes up and it touches it and it comes back and it hits my level? I'm out. I'm out of the trade. That's okay. I made my, I made 1-to-1 on half my position. The other one's break even. That's fine. But if it keeps going, I lock in a little more. Now I'm walking in more than a 1-to-1 on the other half. And over here, now I'm walking in about 2-to-1, okay, on the other half. And I may get up to 3-to-1 on the other half. So if I got out right now, I'd be 3-1 on one of them. I'd be 1-1 on the other. So that basically puts me at a 200% return on the trade at this moment. If it keeps going up, I have till 3 o'clock. I got another hour and 20 minutes. Could actually make even more money on that other half. So this gives you a very simple way on how to trail your stops when doing news trades. But you got to be nimble. You got to be quick, okay? Because if that thing comes back on your other half, you need hit the button, okay? You got to just get out. So if it comes back and hits your trailing stop, just get out. So if you find yourself having a hard time psychologically hitting the button, if you don't want to sit there and babysit it or, whatever, of getting out when it hits that price, then you need to stick to 1-to-1. And there's nothing wrong to 1-to-1. Okay, 1-to-1's great. And more often than not, you know what? All you're going to get is 1-to-1. So every once in a while, you'll get 2-to-1, 3-to-1, whatever. But those 1-to-1 basics are very simple. And, here's the other beauty of the 1-to-1. You put the trade on. Let's say you put it on at 8 o'clock. You went and had breakfast, okay? You come back. News is coming out at 10. You sit down at your desk. Within 5 minutes, profits hit. Your trade's done, okay? You literally spent like a couple minutes putting on the trade, spent about 5 minutes watching it, 7 minutes total that morning, and your trade is done. Every time. Very, very simple. Just boom, very small amount of time. Making 100% return potentially on a trade that has completely defined risk. So I'm, risking 30 to make 30 net on the trade. Not a bad way to trade. Not sitting there all day long. And now there's not, there's tons of these trades. Now some weeks we may have like 7 of them. This week we only had 2 specific straddle strangle trades. And so the one we had last night and the one we had this morning. So, and of course I'll go over next week's as we get into next week. But, lots of profit potential there, and they're just very cool, very relaxing trades. You know what your risk is up front. And if you'll take off, like I said, half at 1-to-1 and trail to break even on the other half, and then just start trailing your stop up using the deviation level closes, very, very, very simple method to see if you can maximize that profit. Now, let's take that same idea. We were talking about the Aussie dollar from last night. Okay? Let's look at it. And let's see if you would have done that. If you would have done that same method, okay? Let's go back over here. We got in. We got out of that trade. Now, let's say, this one we had an interesting scenario. We were like right at the 1 deviation just trying to get our 1-to-1, okay? But let's say we went with that. Let's say, okay, you know what? I'm taking off part of that right now. And so you got in, and you went with sort of what I was talking about, where we got in over here, and we got out just a few ticks before the deviation level, okay? And then you waited for it to close above on the other half. Well, it didn't close above. Now, if you chose the 11 o'clock, it finally closed above, like right here, past 22.50. So if you put the other half at like a break even, which would have been right about down here, okay? And the other half, you just let it do its thing, waiting on a close above, waiting. Finally, you get a close above. Then, you would have expired pretty much right there at the 1 deviation level. In that case, you sat there for 4 hours to make another 3 ticks on the other half. It really didn't make a big difference for you. Now, over on the dollar CAD one, you sat there for a few hours, and you made triple the amount of money on the other half, so to make another 60 ticks, so it paid off. So sometimes you're going to sit there for hours and only make a couple. Sometimes you're going to sit there for hours and get knocked out at break even on the other half. Sometimes you'll sit there for hours and you'll make 3 times the amount you're going for originally. So you got to decide, is that worth that sometimes effect, that break even, that 1-to-1, that few ticks, that 3-to-1, is that worth all that time? Or would you rather just sit down, put the trade on, come back, watch the trade for 15, maybe 30 minutes and be done with it? What are you looking for out of trading? And, in my case, I put it on. I came back up here right as the news came out. And me and my daughter were looking at it. We're watching it. And I'm like, okay, we're at the deviation level. So, we need to close it out because our take profit's a little bit above that. Let's go ahead and cut that thing off. We shut it off. Boom, took the profit. Went back to doing her art homework. So, didn't spend a lot of time sitting up here in front of the computer on it. And that's the cool thing about, trading the news on Nadex is you get that defined risk and you don't have to spend all day doing it. Okay, so hopefully those are a few lessons that you're able to pick up, put together, considerations when you're doing the news. I mean, it is pretty simple and straightforward. Once you get down to the basic, how do I calculate 1-to-1? How do I calculate break even? What's my range? Is my take profit within the range? Once you get past that, that's sort of like, 101. Then you can start moving, like I said, into 102. Okay, do I need to take my profit right before the deviation level when I see that? Do I want to, split this into, halves and try to trail my stop to make more? Is it worth the time to me to do that or not? So, some days, you can clean up. Some days, just a waste of time. So, all depends upon, how it is that you want to, do the trades. But that's sort of the second level in it. And the more you do these, the easier they get. And they're not hard because you're not picking direction. It's just a little bit of addition and subtraction. All right. So now let's look on over and let's check out what other news reports and earnings you need to be aware of for the current week. So for this week, we got WEF meetings are going on all day. Today, tomorrow, Friday, Saturday. The World Economic Forum. So you'll see various news releases coming out of that. And that can cause just some weird activity. So just be aware. Obviously this morning, we also had the United Technologies earnings release came out. So let's look over at, let me pull this up, and we'll check out a couple things. Let's look at the Dow, and then let's go ahead and throw up United Technologies right next to it. Let's look at 10-minute bars on both, or 15-minute bars on both, whatever. And UTX. And so we can say their earnings came in, and the expected time, which is the big thing that I'm more telling you about more than anything, is just the expected time of the release was 6:30. And let's see, did they hit that? Were they early? Were they late? Let's break it on down. There we go. And let's see, it's not showing me the exact time on here. I was going to see if it's, sometimes they'll show me on things from the exact release time. Part of that low issue there. So yeah, they said before market open, but it's not really giving me a detail. There it goes. There we go. Okay, it's showing about 6 or 7. So Thinkorswim isn't being real specific for me. It's showing 7. It's like the first trade it posted. So the expected release time, which I believe is when it came out, was 6:30 this morning. Even if it came out at 7, you're aware of it, so you're fine. You had that heads-up notice. It's okay if it comes out a little bit later. I don't like it when it comes out earlier than the expectation. We go over here. We go to 6:30, and we'll see, Dow started picking up a little bit off that. UTX started picking up in pre-market trading, and then backed off. But you can see UTX and the Dow sort of 1-in-1 there, trading together with that earnings announcement, so being aware of that. All right, stay right there. When we come back, we'll wrap up the rest of the week for you.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. DirectionShares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the DirectionShares carefully before investing. The prospectus and summary prospectus contain this and other information about DirectionShares. To obtain a prospectus or summary prospectus, please contact DirectionShares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. So United Technologies did beat estimates by about a nickel right there. It's like by a nickel on that, and that helped drive the Dow up early this morning. But let's see what else we have going on for you this week. Okay, so coming on up, we have, let's see, got our weekly oil inventories. As you probably noticed, as long as you looked at the most updated calendar, they are moved to tomorrow at 11 o'clock because of the holiday. So not only have they moved to a different day, but they're often moved to a different time. So instead of being that 10:30 release time, oil inventories will be Thursday at 11, so 30 minutes past when natural gas usually comes out. And then we also have, of course, like I said, the WF meetings. We talked about that. Procter & Gamble is going to have their earnings releases are going to come out at 7 a.m. in the morning. So that's PG right there. And we're going to have McDonald's is coming out at 8 a.m. All right, so also they're in the Dow. And then in the evening tomorrow, we're going to have Microsoft coming out. That's in the NASDAQ 100 and the Dow. That'll be coming out at 4:05, so right before the futures close. We'll also have U.S. unemployment claims. We do have U.S. existing home sales tomorrow. And so you could potentially look at butterflying those. Most currency pairs, euro dollar, dollar CAD, dollar franc, are like 30 pips average high to low an hour before the news announcement comes out at 10 a.m. Aussie dollar is only 20, dollar yen is only 25. Pound dollar is the biggest with the 35 pip range, high to low an hour before the inventory report comes out. So if you want to go in at 9 and look for a butterfly with that high to low range, you could look at doing an iron butterfly pre-news that expires at 10 a.m. right before the news comes out. So that would be a trade that you could do based on news. So pre-butterfly news report. And look at a potential, maybe, strangle tomorrow on Microsoft. I know last time we got a massive move on Microsoft, so I don't know if we're going to get it this time or not. Being right there at the end of the day, there might be a potential strangle or something on NASDAQ or Dow to check out as the day comes up right there at the end. Of course, you have to get in before the thing comes out, so you have to get in like at 3:55 or 4, maybe even earlier. But that's what I'm going to be watching for to see if I see anything. But again, also be aware, again, oil inventories tomorrow at 11. So that's not the usual schedule. I wanted to make sure if you're trading oil that you do have that on your calendar. No major earnings for the big, heavyweight ones that we track in the major two indices there, the Dow and the NASDAQ, coming out on Friday that you need to be aware of. And to get WF meetings the entire time. That pretty much gives us our current market wrap on the news that you can use right here. So we got the news that you can use for tomorrow. We covered out how to do the ones for last night and this morning that came out that I talked about yesterday. So hopefully you're able to pick up some of those lessons, record them, write them down, use them when the next report comes out. So you can put this stuff into application. And if you don't have it already, hop on over, TFNN.com, click on the Nadex banner right there on the front page, on the top right of the front page. Click on that. And as soon as you do, click on Trading Demo Trading Account. Fill in your username, first name, last name, phone number, and email address, and click Apply for Demo. That'll get you going, get you set up. They'll send you an email with a password in it within seconds. You can log in. And they'll give you a demo account for a couple weeks. If you apply for an account and open an account, they'll add a couple more weeks. But if you put $100 in, they'll add another week. Now, if you just put in if you'll put one trade on, it doesn't matter if it's 100 trades, 100 contracts for $50 each, or one contract with a $3 risk. If you put one trade on, they will extend out your demo for a year. Okay? And so you can really start practicing with it. And then, of course, to get your live account, just click Create Account. It takes about 5 minutes to go from start to funded. But, of course, you definitely want to try out that demo and figure a few things out first. All right, well, y'all have a great day. Stay tuned. We have another great show coming up for you right after this.
Hi, I'm Steve Rhoades, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhoades Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.